Alright everyone, it's time to get you ready for the week ahead. So I'm gonna show you what I have on the monthly chart. So far we've been bearish on the market. Let's see what we have. Now when we zoom in a little bit, we can see that we've been still in that range between this candlestick. And what do we know about ranges? So let's just mark it out and I'm going to explain it to you. So this is our high and this here is our low. And as we can see, the previous week we've been ranging between this candle. And when we have a range, what happens is the high or the low is going to be taken out because the market has one job. Its job is to take the highs and the lows in the markets. And staying in a range is not what it does generally. Now this gives us an idea of what we can expect over the week to happen. So over the week we're expecting this high to be taken or this low to be taken. This is why it's important to have this marked out so we can see where the price is going next. These two areas are our sell side and buy side liquidity. Okay, so we have our previous monthly high as our buy side liquidity at this price point. And then we have our previous monthly low as a sell side liquidity. Okay, so now we've marked these highs and lows. The next thing we have to do is mark out our liquidity points and inducement zones that we think the market is going to fulfill in some specific time. Now, so far what I've seen is that the market has retraced from this area, okay? So after the price reached this level, it started pulling back to the downside. So in this case, we're looking for bearish price action. Now, of course, it's important to know that the price can actually retrace a little bit up and then continue to the downside. Okay, so here we have imbalance on the monthly chart. So this is our 1M imbalance, okay? So I don't want you to focus too much on the monthly chart because this is something that's going to happen in some longer time than what's going to happen over this week, but we still have to know what's the market doing on higher time frames and to mark out our zones where we can expect potential reversals or continuations in the market. Okay, let's move to the weekly chart. Okay, on a weekly time frame, the price seems pretty interesting, and I'll explain you why. The first thing I see is that we've taken out this fair value gap right here, okay? So this fair value gap has been taken over the previous weeks. So this is our weekly imbalance, which has been reached. So let's see what's happening right here. The first thing I see is that the market has swept this liquidity right here, okay? So we have liquidity grab or liquidity sweep, whatever you call it, it doesn't matter. So I'll mark it as X, and then what happens, the market reaches the supply zone and then created a market structure shift right here. So this so far is an indication of that the price is ready to reverse for some time. What we need to do after we see this type of price action is, because this is a simple textbook analysis. Okay, let me explain what that really means in general. So the smart money traders, what they do is they wait for the price to break liquidity. So it sweeps liquidity. They wait for a market structure shift. We wait for a retracement back to the upside where we have our order block, and then we expect from this area the price to move even lower. Okay, so this is something we're really looking for. Okay, so market structure shift, liquidity has been swept, and then the price reaches back, retraces back to this order block, and then we're ready to take positions to take other lows in the market. So in this case, the real question is, where is our order block? Now, if you don't know what the order block is, it's basically indecision candle. Now, I'm not going to dive deeper into this, but I'll just show you where our order block is. So in this case, here we have indecision candle, okay? So this is our order block. So weekly order block. Okay, the next thing that happens is we assume the price created a market structure shift and retrace back to this order block. From there, many people have taken their positions with their stop loss around this area. However, what happens after that is something very interesting. Now, we had the power of 3. So the market created the power of 3. And if you don't know what the power of 3 is basically the 3 main phases of the market that the market does. So basically accumulation, manipulation, and distribution. So how does this really look like? In accumulation phase, we usually have the market or the prices basically ranging between a ceiling and a support. And then what happens is after the accumulation phase ends, what we see is some kind of manipulation. And usually the manipulation phase is taking some liquidity on higher time frame or lower time frame. It doesn't really matter. So we're taking some liquidity that has been resting probably, let's say right here. We take this liquidity and then we see the price creating some kind of market structure shift, and then we see a distribution to the downside. So these are the 3 phases of the market: accumulation, manipulation, and distribution. So what we have right here is exactly that. Okay, so here is our accumulation phase. Okay, the price has accumulated for some time, and then we have manipulation, and this manipulation in this case is taking out this liquidity. Now we're taking this liquidity, and why do we take this as liquidity is because usually pin bars are something that tells us either that we have a strong bullish or bearish momentum. Okay, so when we have a pin bar candlesticks, they usually happen below supply and demand area. And sometimes they can even reach, as in this case, the candlestick reached that supply area and then pushed back to the downside. So most of the time for us smart money traders, we take this as liquidity. And we take it as liquidity because this high, this week's high right here, is what we call inducement zone. And we're expecting the market to later on fulfill and take out this high. This is why we say that distribution phase took out the liquidity because we had inducement zone right here. After we had accumulation, manipulating of this high, the market shifted down, which is the distribution phase, and went all the way down to this fair value gap or imbalance. Okay, so this is something very important. So what we can see right here is over the previous few weeks, we've been in a range, and we also can see that the market is more bullish rather than bearish. And in this case, that means that we're looking for the highs to get taken out. In this case, I can expect the price to go a little bit lower, somewhere around this zone, and then continue to the upside and take out either this imbalance or reach anywhere in this area, because something about the power of 3 is that when we have accumulation, manipulation, and distribution is that the price most of the time reaches back to our optimal trade entry. And an optimal trade entry is when we have Fibonacci tool used to find this zone. So here we have our 61% to 78% where we can expect the price to reach back and then retrace from this area. Now, of course, it doesn't really work on its own, so we're looking for more confirmations, such as liquidity or imbalances. As we can see right here, we have imbalance. So this gives more power to this area and make it stronger for the price to react from it. We also have this range right here, which makes it even a stronger area because we have drop, base, and again drop. And most of the time the price reaches to this drop phase. So I'm gonna mark this out. I'm gonna remove this, and this is where I'm gonna be expecting the price to reach back. Okay, I'll just remove it for now so we can be more clear on the charts. Okay, so as we said, I'm expecting the price to have some kind of reaction to the downside and then reverse to the upside. So I'm going to be looking for something like this, okay? Now, we're going to move to a lower time frame to see what's happening there. Okay, so now we're on a daily time frame, and so far what we have on the market is pretty simple. Okay, so what we have so far is we have this break of structure right here, and then the price sweeps this low, which means our liquidity in this case has been swept and then reverses by creating a market structure shift right here. Now, this is not something new. We've seen this in the previous weeks, but again, I'm going to show it to you so you gain some more understanding of what's happening in the market right now. Okay, so then what we have is the price creates this market structure shift and then fulfills this inefficiency right here. Okay, so here we have again this imbalance that has been taken out. So 1 day imbalance. Okay, so we've taken this imbalance, the price reaches to a demand area, so this candlestick right here, and then continues back to the upside. So far we've got our buy side liquidity resting around here. Now we can see the price moving to the downside for a very simple reason. We've reached nearly this high, and before the price takes out any high, we can always see some kind of indecision. Now usually I would mark my daily buy side and sell side liquidity. However, right now I don't see that there's much of a point because I like this indecision kind of a little bit more than this area right here. So I'm gonna take this as my sell side liquidity. Sell side liquidity in this area. Okay, so usually now I'm expecting the price to breach this sell side liquidity, fulfill some inefficiency right here or even here, and then continue to the upside. And again, let me just show it to you what I'm expecting. So something like this. Okay, this is what I'm expecting the price to do. I'm not really looking for the market to take out the monthly low because I'm still looking for bullish reaction. So my main focus is going to be on the buy side liquidity and the monthly high. Okay, so I didn't see anything interesting on the other time frames, so I moved on to the lower time frame. So 5 minutes time frame. Let's see what do we have, because here is something again that can potentially happen. So right now, what I really want to happen is the price to take out this lows right here. So sell side liquidity at this area, and then we have our buy side liquidity at this high. Now again, I'm reminding you that we're taking the high and the low of the last price movement because this is something we're expecting that price to take. In order for us to be in a downtrend is for the price to break the lower lows. And if we have an uptrend, the market has to take the higher highs, which means that we're looking to take the highs and lows in the market because these are our liquidity points. And if the market doesn't take them out, which means the market is ranging, to be honest, it cannot stay in a range for too long. So this is why it's important to mark these levels. Now, the other thing I see is that here we have the perfect example again of the power of three. We have accumulation, manipulation, and distribution. So again, accumulation phase happened right here. Then we had manipulation, which reached the supply area, and then we saw distribution to the downside, breaking this structure. So the market created this break of structure right here, indicating to us that we're still going lower. So what I like to do in this case is use the Fibonacci tool from the highest point to the lowest and find my optimal trade entry where I could potentially look for sales in this case. Okay, so anywhere from this area, I have two options: to wait for the price to reach this area, create market structure shift, give me some more confirmations that the price is ready to reverse after reaching this area, and look for take profit around this area, or I can have aggressive entry. So here my stop loss above this 78% and my take profit at these lows because I'm expecting the market to go even lower. So this is an entry that I might be looking into this week to have unless the market condition changes. So yeah, that's something I'm interested to take into this week. Now, if the price breaks this low before reaching this area, then things might change, but this depends on how the market reacts and what's really happening over the week. So far, this is our market breakdown analysis for the week ahead, and as you can see, I'm still bearish in this case. On higher time frame, again, I'm bearish and I'm looking for the price to reach some lower areas, take out some inefficiency, and then move higher. But this can take some time because higher time frames are positions that can happen over the weeks or months. So overall, that's it. That's our market breakdown analysis. I hope it was useful. So let's crash the week.